Each year, Brian, the Federal Reserve sponsors a meeting in Jackson Hole, Wyoming. One of the topics, will they slow down buying $120 billion in bonds each month to boost the economy? Here's Chris Wallace of Von Nelson Investments.
Yeah, I do think the narrative is right that the Fed's behind the curve, but it's wrong in the sense that we need to aggressively tighten. But by and large, they're going to have to provide liquidity to kind of sustain markets and really try to keep the recovery going in the face of the slowdown.
Brian, if the Fed pulls some of that support back, could it trigger the correction we've all been worried about?
Yes.
Okay.
But we do need to stop. It's artificial. It's artificial. So
what
it's
does
not,
that mean?
Okay. So the Federal Reserve is buying $120 billion in bonds each month. So it's like having a friend in the hospital that you know has been on life support, for months and months.
Okay.
And he's not getting any better, right? It's just he's
not laughing at that scenario, just wondering where you're going with that analogy.
No,
yeah.
But I mean, you have somebody that is in there, right? And all of a sudden you get a call from them, and it's like, oh, hey, I want you to come down here and come take me home. And you're like, really? You got better? Yeah, I was just in there last week, and you were all on the tubes and the ventilator, everything, and what's going on, right? And okay, well, this is amazing. You get down there, and he's still got everything hooked up to him. He's just he's not telling the truth.
Okay.
And that's basically what's happened to the Federal Reserve. They are not telling the truth. Like, oh, we're just trying to taper we're going to taper a little bit. They're not going to taper anything. They want to continue to boost the economy, but it's artificial.
Yeah.
It's artificial. They're not. You can't. If all of a sudden you stop buying the bonds, who's going to buy them? The bonds aren't paying anything. The yields are nothing. I mean, you're going to buy a 10-year Treasury for a little over 1%. Woo! You can hold something for 10 years to get 1.3, 1.4%. So the idea is that you've got
there are some savings accounts that get almost that.
I know. It's just it doesn't make sense. Now the advantage to having a 10-year Treasury, it's the government bond. It's safe. If the government goes down, we're all in trouble. So I think would it have a correction? Yeah, I think so, and we probably need it. Just be ready for it.
Yeah.
Prices are inflated on everything: houses, stock market, you name it. Isn't it? I mean, everywhere you go. A lot of things are starting to pull back. I mean, there was a home builders index we talked about, I think it was last week, where it's pulled back down because people are going to look at the house going, can't afford that. That house was $100,000 less.
It is a terrible buyer's market.
It is.
Great seller, terrible buyer.
But when things get so expensive like that, it makes prices deflate, right? The problem is right now we have an inventory problem still. You can't.
That's not a horrible buyer's market. I mean, you could still get really low interest rates now. That is a big positive.
Right, and that's another thing. That's artificial, right? They're keeping the rates low, and they're buying $120 billion. If the market was so good, why wouldn't an investor buy the bonds? Why do they need to buy them?
No, that's a good point.
If it was so wonderful, I would be buying them.
Yep.
And I'd be getting a decent rate of return for the risk, right?
Yeah, right.